Matt Cunningham.
And I'm Colleen Ledford. Welcome to the newest episode of Mortgage Matters. Today's conversation is going to take us to the topic of the home buying process from the very beginning. As a real estate agent, when I have someone who's interested in looking for their dream home, the first thing I'm going to do is find the criteria that you're looking for, and then I'm going to send you to Matt, who's a mortgage loan originator. He's going to go through the process of getting you pre-approved, and today we're going to talk about what that means, what it looks like, how long it takes, and we're going to try and answer as many questions as you may have prior to even getting into this situation.
You're absolutely right, Colleen. It's super important for borrowers to get pre-qualified prior to, at the start of the home buying process, prior to getting out and shopping for a house. And the reason is you need to know that you, A, do qualify.
There's that.
At all. And I think we covered this a little bit in episode 1. Even before that, we need to know that if you don't qualify, why you don't qualify and what you need to work on to become qualified. And then, you know, how much you qualify for, what your budget is, and you know, what that home buying process is going to look like for you moving forwards. The reason for that is that we don't want to waste your time.
Right.
I know that you don't want to waste our time. You know, everybody's busy.
Or really expensive gas.
Or expensive gas, you know, go look at, you know, 25 different properties, and it turns out you're not eligible to buy any of them. So that's the importance of getting pre-qualified.
Sure. So Matt covered a little bit about who should get pre-approved. The basic answer is everybody. We want to know your budget, and we want to know the right budget. And with that budget comes your down payment amount and all of those things that we start out figuring out the money, and then we match the house to the money with your criteria involved. So who should get pre-approved? Everybody who's interested in buying a home. But now I really want to look at, what does getting pre-approved mean? What does that process look like? What kind of information does your MLO want from you? What do they do with that information?
It's terrifying.
How long does it take?
It's terrifying. We're going to shine a light in your eyes, go into all your financials.
Blood samples, you name it.
No, it's not terrifying.
It really isn't. But it's important that you know that, because I think if you don't know what the process looks like, it can be a little frightening to say, hey, I don't know this stranger, but I'm supposed to give all this personal information to them. But I promise you, they're going to try and get you into a home that you can afford and that you want. And that's how real estate agents and MLOs work so closely together for you. So I'm going to go ahead and give the floor to Matt for a moment to say, you know, what does the process look like? How do we start with that initial phone call when your agent says, I need you to talk to my mortgage loan originator. I need you to get pre-approved. This is what he is going to do when you call him.
I'm going to try to make you laugh. I think that's the most important thing, is to remember to have fun and relax and enjoy each other. Be professional, but there's no reason that everybody can't kind of relax and have a good time through this process. We mentioned that last week. So the first thing that I'm going to do is just kind of ask you some general questions. Usually my first question is, hey, it sounds like you're ready to buy a house. Congratulations, that's a great starting point. Tell me what your plans are. And at that point, within about 5 or 10 seconds, I'll be able to figure out if you're a first-time home buyer or an experienced home buyer, or you're looking to buy an investment property. And, you know, a lot of times I'll hear, I really don't know. I don't know. I'd like to buy a house. I think we're good. I have no idea. And that's exactly what I need to hear. So, you know, there's no such thing as a stupid question, especially in the mortgage industry.
And especially about finances.
Of course.
I mean, if you don't know, you don't know. And by asking the questions, getting that information, that knowledge, it's so empowering. And Matt's not going to lead you astray. He's going to take that information that you give him, and he's going to put you with the right product. He's going to teach you about it, and he's going to tell you what's going on with the information that you give him. It's not just about credit score. He's going to be looking at a whole profile. And I think today we're going to talk more about what that profile looks like in the eyes of a mortgage loan originator.
Absolutely. So the first thing I'm going to do is just kind of ask a little bit about 3 basic things, okay? Work. What type of income do you have? What kind of, how are you paid? how your salary works. And then I'm going to ask you about your credit range. Most people have an idea. If you don't, there's a pretty simple way to find that out.
Right.
Then I'm going to ask about what kind
Debt to
how much
income.
money do you have?
Yeah.
How much money do you have?
Cash.
Whether it's not cash, because cash is we can't use cash. Cash
Down
it has
payment.
to be trackable, traceable,
Yeah.
seasoned, sourceable funds. So checking, savings.
So
401k.
drug earnings under the bed would not be qualified.
As long as it's in your account for at least 2 months. No, I'm kidding. No,
Just kidding.
that's not.
We're kidding.
Now that being said, there are obviously legitimate.
What about my dad gave me a gift of some money to use for my house, but I can't really tell you the source because my dad just gave it to me.
Well, we can use gift money for down payment up to 100% of your down payment and your closing costs.
That's a big deal.
But it has to be sourced, seasoned, or sourceable. So in other words, if it's in your account, we're going to need to get probably 2 months of dad's checking account showing that it didn't go in there from another place, because we can't give you a loan if you're getting a loan to get the loan.
Right.
And then we would need just the transactions to prove that it was
a gift.
legitimate gift.
Yeah.
So that's not a problem at all. But those are the three things: credit score, money, and job and income. And after that, there are lots of extraneous variables, but that's basically it. And so I'm going to have that conversation with borrowers. And usually once I've had a 2 or 3 minute conversation like that, I know fairly well that they're ready to roll, or that they're not, and what needs to be worked on. If we fill in a loan application and I pull credit, and then we then find out that they're not potential borrowers yet, I can look at the credit report and I can give definitive advice on how to improve their credit. But backing up, income, right?
Yeah.
Types of income. There's a few different types of income. Number one is self-employed income. Like real estate agents, if you have self-employed income, you're going to need at least 2 years of tax returns in order to qualify. In most cases, sometimes you can qualify on just 1 year of tax returns, and then, like Colleen said, don't feel bad if you don't know everything.
Yeah.
I don't know everything.
He will find it out though.
Because Fannie Mae and Freddie Mac changed the guidelines constantly. During COVID, it was at least as much of a nightmare for us as it was for you. And I know how hard it was for you. COVID guidelines were changing all the time. People had self-employed businesses where there was no business, there was no income, and so their incomes were, and so the guidelines changed. Guidelines are moving back towards being a little bit more relaxed because obviously there's been no shutdowns in the last couple of years, I don't think.
Not here in Georgia.
The guidelines have been changed a bit, but typically with self-employed borrowers, we're going to need 2 years of tax returns and then a year-to-date P&L.
Of your business.
Yeah, with bank statements supporting those funds going into a business account.
Yes.
Other than that,
Does the type of business structure matter, whether it's an LLC, an S corp, a C
can.
corp? Can that affect someone's ability that's self-employed to get into a pre-approval situation?
It doesn't necessarily affect ability. It's going to affect the amount of income that we can use. If it's an LLC, S corp, it depends if they're 100% owner or more than 51%.
So the way that the
owner.
business
So
is structured,
the way the business is structured
with managers
dictates.
or
If
whatever.
there's a couple of owners, we may have to factor in the other owners'
Income?
or ownership of the of the business to figure out income. It's extremely intricate.
But those things like that can make a difference.
Absolutely.
Okay, good to know.
Moving forward, aside from that, it's employed people, rather than self-employed, and of course those incomes come in different forms. There's W-2 income, which may be hourly, salaried. Salaried is great. It's easy. I make $80,000 a year. That's perfect. Right. We know exactly what that gross is each month. Easy to work out. Hourly can be a little bit different, right? Because full-time is 30 hours a week or more. So some people say, yeah, he works 40 hours, and then you get the paychecks, and it's variable income. It's less than 40 sometimes, and we've got the last 2 years W-2, so the income comes in a little bit lower. Again, another great reason to get pre-qualified so that we can go through this and kind of button down income early on, so that there are no there's no foreseeable mistakes.
Well, you don't want the speed bumps. If you can avoid them, then we do everything we can to eliminate those prior to reaching them.
Absolutely.
So what kind of a difference would it make if I was on salary but I got bonuses or commission? Is that a different scenario as well, or does that kind of fall in with the salary people or with the commission people?
That's a great question. Usually those, so I'm straight commission, but I work off a W-2. So some people have a base plus commission plus bonus plus. If you do a loan for an airline employee, they get paid about 20 different ways.
Right.
It's like per diems and all kinds of stuff going on, and it's obviously very intricate. So typically, let's say an average salesperson that has base plus commission, we're going to be able to use the base. They've got a $60,000 base, that's $5,000 a month, that's easy. But then commission becomes a little bit tricky. If they've been in the business for less than 12 months, we may or may not be able to use that commission because we don't have
to average it out, right?
Well, we may not be able to use it all if we don't have enough history, and it depends which how they qualify.
Makes sense.
But yeah, I mean, those are all things that come into play. So that's really income in a nutshell. I mean, the simple incomes are W-2, salaried, hourly, full-time, those types of things.
Provable income.
Yeah. It's all trackable income. And then, of course, once we get into more advanced different products, there's bank statement only products that are great for self-employed people that write a lot of stuff off and don't show a lot of earned income each year, but they do qualify for a bank statement only, which is a non-QM product, a non-qualified mortgage product. And in that case, we need some other things to verify income. But that's income in a nutshell.
So how long does this process take when when you're gathering this information? Is that a detail? Is that an hour that somebody breaks out of their day, or is it 20 minutes? What does that look like when they call you and need to impart this information?
It's a great question. It depends. If somebody has salaried income,
it's pretty straightforward.
I make $120,000 a year. You make $10,000 a month. Boom, we have it, right? If somebody says, I'm self-employed, I've owned my own business for 5 years. The last time I checked the guidelines, which could have been yesterday and they could have changed, but if you own the business for 5 years or more, you may be able to use just 1 year of tax returns.
Okay, so you take maybe that first year where it's not so strong.
The most recent year coming out of COVID was a big deal during that time. But I'm going to need to gather documents, right? So I may ask you to send an introductory email to your accountant with you and me CC'd, and or me CC'd, and just authorize them to give me anything I need. You don't have to do it that way, but it cuts you out of the work side of it, and we like to reduce our borrowers' work as much as possible if that's how they want it. And then, so I may have to gather documentation, and now we're moving at the speed of other human beings.
Yes.
So we get that as quickly as we can, and as soon as I get it, it's a relatively simple process of doing the math and figuring it out, but we can work that out quite quickly.
Good.
So yeah, just any.
So they don't have to take a big chunk of their day, and
no,
and it's not really as imposing as it could sound.
No, well, the other thing that we're going to do, and we kind of skipped a bit here, is we were digging into income and we were going to dig into money and credit. I have kind of a peripheral conversation with folks on that stuff.
Mm-hmm.
And if they're good and they're ready to buy, they want to buy now, the next step in the process is I'm going to send them a link to my loan application.
Right.
And have them fill in a loan application. A good, solid loan application is a great foundation to build everything on. I'm afraid it's not very exciting filling in a loan application, but it's super necessary because we get all your personal information, which we need. and then we get all of that other information. We're going to get your income information. We're going to get your cash
Debt information?
We're going to get your...
Or does that come later in the process?
We're going to pull credit, right?
So that'll give
you
you
your
the
date
debt.
of birth and your social security number, address, name, those types of things. Then we'll be able to pull credit and get your debt, and that will populate your liabilities into my origination software, and then we'll have your debt.
And I know, I mean, I've worked with some buyers who don't understand that the debt to income ratio is a big factor. It's not just your credit score or just how much money you have, but how much you owe compared to how much you make is a big factor. And if that number is too out of balance, it can knock you out of being able to get a mortgage right now until we make those the other way.
Yeah, and the different products have different debt to income ratios.
Right.
So there's two acronyms: debt to income ratio (DTI) and loan to value
Yes.
(LTV). And there's more, but those are typically the ones that borrowers get confused. Your LTV is your loan to value. So in other words, if the house is $500,000, you put $100,000 down, your loan's $400,000, your loan to value is 80%.
Right.
80% LTV, which means you eliminate mortgage insurance. Your DTI is your debt to income ratio.
Right.
Let's say you make $10,000 a month and your monthly debt is $1,000. Your debt to income ratio is 10%. That's great. Conventional, we can borrow typically up to 50% DTI. FHA is going to be 55%. USDA is going to be about 42%, but there's some wiggle room there.
Can't wait to talk about USDA mortgages. Most people don't even know about them, and they're really cool.
Fantastic. Rural development loans. And then VA, you can actually borrow up to any debt to income ratio
for our veterans,
as long as it's approved.
Love to work with the veterans.
Absolutely, of course.
To serve them.
Yeah. So that's those are the two sort of major acronyms: DTI and LTV, and it's why they're so important and there are ways of being able to fix issues. Let's say your your debt to income ratio is a little bit too high to qualify for the loan. You may have a
small thing that you pay off or roll into another.
Yeah.
We eliminate it. Just gets
Eliminate
moved
the
to a
debt.
different column, but we can clean it up a little bit.
If you have the cash, let's say you bought a $50,000 car almost 6 years ago, and your payment was $500 a month. You only owe $2,500. You got 5 months left, or whatever, 4 months, and your payment's $500 a month. That's a big chunk in your debt. But if you have $2,500,
pay it
off, and you eliminate that debt from your ratio, and now you're back under, and you're ready to rock.
That brings to mind something else that a lot of people don't understand, particularly if it's their first time going through the mortgage process. Once you get pre-approved, you're not allowed to spend any money. Okay, and I mean, it sounds kind of funny or like I'm trying to be fun, but I'm actually serious. Like, don't go buy a car. Don't go finance furniture.
You can buy groceries.
You can buy feed yourself and keep your electric on. That's about it.
Yeah.
I'll put gas in your car.
Yeah, the idea is not to change your credit profile too much, right? Don't go buy a boat.
We can't, they have big swings.
Don't quit your job 3 days before closing. We do what's called a WVOE, a written verification of employment early on in the process, obviously, because we want to confirm employment and income and salary and those types of things. But then we also do a VVOE, a verbal verification of income or employment. And that's usually within the last 10 days prior to closing.
And what do you do the morning of?
A soft pull on credit.
That's right. So even if you think, oh, I've got this one.
We're clear to
the
close,
morning,
baby. We're
the
ready to
morning
go.
that we go to the closing table with the attorneys, if you've had a hit on that credit, it could actually affect the home sale that day.
Oh, absolutely, it will. And it doesn't even have to be, I don't know that we necessarily do it the morning off. If it's if it's a 9 o'clock closing, it's probably going to happen at 1, 2, 3, 4 o'clock the previous day.
Right.
Because that's immediately prior, effectively, from a business hour standpoint. But yeah, any kind of just credit inquiry, whether you bought something or not, because if you get a credit inquiry from a car dealership, that debt is not going to hit your credit for a month or two if you did get the loan.
Right.
So just the credit inquiry is going to raise the questions.
Well, it's going to
Underwriting's
pull
gonna
up
wanna
that
know,
flag. What are you doing looking at a new car?
and closing is canceled, and all the pizza that you ordered,
Yeah.
and the movers, and all the stuff.
The
and
paint.
Your family's coming in town to help you move that weekend because it's Friday afternoon.
Yeah.
You just messed
Later.
everything up.
Yeah. So it's another great point. You know, how you start the pre-approval process is just as important as how you end the pre-approval process. Obviously, there's a lot that goes into it. Matt has discussed income to value, debt to income. I think, you know, we'll get into down payments more on a future episode in the next couple. However, all of those things matter so much to the mortgage loan originator, and he is working so hard to get you that money, to get you in that house. So we hope that you have found today to be really informative. Of course, if you ever have any questions, DM us, like, subscribe, and share with all your friends.
Hit the like button below.
Always. And well, you can always reach out to us. Our information is below, and we'd love to answer those questions for you, get you started, and just even be a resource for you.
So thanks again for checking out the video today. We hope it was useful. If you have any additional questions, like Colleen said, don't be scared to reach out. I'm available 24/7. If I miss you, I'll get back to you. I'm sure Colleen's the same.
Yes.
We're going to get out of here before anybody else walks behind us, before the sun goes down, before it gets any colder. It probably looks like we've been filming this thing for about an hour and a half, doesn't it?
I know.
We may have been.
But you know what I'd also love? If you have specific questions about real estate, about mortgages, about any of it, put it in the messages below. Put your comment in there, and we will address every single one of them.
For sure. Thanks again. We'll see you next time.
Cheers.
On Mortgage Matters.
Cheers.